And doesn't get bigger than Ranbaxy today, 15.5% down. The US FDA has banned the plant in Punjab, ban on violation of norms. So that means almost all supplies to the US market are shut. And that stock is down 15.5% in trade today.
Big disappointment coming in for Ranbaxy, especially when all of their Indian plants are under the US FDA ban as well as under the scrutiny. Of course, Tonsa plant was very strategic for Ranbaxy currently because their plants like Devas, Ponta Sahib and Mohali were already under the US FDA ban. But this was the fourth, and final Indian plant which is now under the US FDA ban in terms of the import. They used to supply APIs to OHM Labs, which is again a wholly owned subsidiary of Ranbaxy, which is manufacturing drugs in the US markets. Of course, now given the fact that OHM was the only plant which was functional, and now API is getting stopped from their, Tonsa plant, clearly indicates the kind of sourcing that OHM Labs would now, enter into, the kind of approval they would have to go under. And also, in terms of the new launches, most of the analysts do believe that Daiwa and Nexium, which were the major triggers for the stock going forward, those approvals might be delayed. Apart from that, this plant again comes under the US FDA consent decree, and as in terms of timeline, no analyst or expert is sure that how much time will this consent decree really take time. They have already deposited close to $500 million with the US FDA for this consent decree, and possibly, it's already 1.5 years, and still no resolution on that front. So clearly, markets fearing that no approvals, problem in sourcing API for their OHM Labs plant in US, and also the kind of timelines one could look at as far as new launch and new pipeline is concerned would be clearly something which is disappointing most of the analysts. If you look at the US revenues, almost currently contributing 40% to the top line of Ranbaxy, and almost $250 million worth of sales used to come from the Tonsa plant alone. So in terms of the impact, very, very big, and most of the analysts clearly disappointing. Let's hear out Manish Sodhalia of Motilal Oswal PMS and what he had to say as far as the stock of Ranbaxy is concerned.
It has a lot of problems on its hands. Now it's only one US facility, which they have to cater to the requirements. And I don't think there is enough manufacturing capacity for them to take advantage of Diovan and Valsite. It's a lost case for the time being. Considerable amount of time will go in rectifying the US FDA issues. So, it's just an avoid, I would think.
It's also a loss of perception that's come in, an impact on the overall perception that the business was perhaps at the point of a turnaround, and that will be reflected in the 52-week as well as the 6-month chart, 3-month chart of Ranbaxy as well, where we were seeing, you can see how the stock over the last 6 months was picking momentum. In fact, on a net basis, it's still in the positive, a 14% gain over 6 months, but I think this decision will reverse all of that. I think half of those gains will get wiped out in just today's session. 52-week, the stock continues to be weak, but the last 6 months and the 3-month chart will also reflect the story. The stock was really building up momentum, and there was a lot of interest, institutional interest coming in, but this decision will reverse that. The 3-month chart and the 6-month chart pretty much